introduce our guest, and which of course you can see on the screen, is indeed Abigail Sirus. And the reason Kirsten and I were so eager to have Abigail come on is because, as you know, Enterprise DLT Live is about interviewing the best and the brightest practitioners in enterprise blockchain. Up until now, that's always been somebody who is providing a solution or has in fact built something out, and they're going to tell us what they've built. Grain Chain, for instance, or MetaLedger, two examples of complete finished production chains. And that's been our focus until today. Now we're bringing in for the first time, second time if you count Symbiont, but the first time a systems integrator's been here, IBM, who have done, I think, more blockchain projects than any other entity on the planet. And involved with a great many of them on the governance side has been Abigail. She'll tell us more about how IBM is structured and how her group is one of several that all converge in creating blockchain solutions for clients. And she's agreed to share, maybe not anything super proprietary, but some of the learnings that she's absorbed from being a global lead in blockchain governance for one of the biggest blockchain powerhouses on the planet. Abigail, delighted to have you. I'm not doing your background justice. You'll have to forgive me, but I really want to get into the meat of the questions. Thanks for coming.
Thank you. A pleasure to be here and to be with you all, especially as we have the holidays upon us. I know that time is scarce, and so I'm really happy to be having this conversation with you and get to join such a great group that I've heard wonderful things about and been able to speak to a number of you already. So thank you again for that.
Yes, and I want to make sure that Andy Martin, who's also on stage here with us without a video. Andy is Abigail's colleague at IBM, and his specialty is, I believe, value, the value creation story rather than the governance story. And so he'll almost certainly have some things to say as we go through these questions, this interview. So in typical IBM fashion, we let Abigail know kind of what questions we were going to ask her, and she built a presentation, which is super because we're going to get more value more quickly, I suspect. So absolutely. I'm inclined to say, Abigail, take it away.
Now.
Yeah.
You're able to see it? Okay, great.
And
switch to presentation mode.
Last thing I'll say before I completely turn things over to you is to acknowledge who's in the room. And so we've got Denise, we got Dominic, Emmanuel. Hey, Emmanuel. Golkolnath. Jacques is here. Hey, Jacques. Les, Mark Stair. Hey, Mark. Pierre is here, and Rachel. So mostly folks that Kirsten and I know from the blockchain governance or blockchain or DLT world. Outstanding to have such a terrific group. And as you guys know, as you have questions, type them into chat or type them into the Q&A system. We'll monitor both, and we'll jump in with those questions when it seems appropriate. And we have 60 minutes of streaming and then 30 minutes of semi off the record where it won't be streaming, and you'll be able to ask even more questions. Right. So you all know to type your questions in, and you're going to be responding to Abigail's presentation. Abigail.
Thank you, Thomas. And yes, please, I'd love for this to be as much of a fireside chat as possible, and for us to share, what you've learned and what I've learned, and to help us as both kind of move forward together in our blockchain and our governance journey. So please ask as many questions as you have, and we'll try to get to all of them. But I wanted to give you a little bit more color just to start off on my blockchain journey and where I fit within the IBM ecosystem. And so I am our global governance design and strategy lead, which means that in blockchain's services group, or our consulting group, I am our sole governance expert. I help to both jump into projects, lead governance design. I act as an advisor on different projects, really along the entire spectrum of all of the blockchain network design development work that we do, from the early stages all the way through our production level networks. For the past few years, I started off in my career in blockchain at IBM, actually developing and designing the actual products. As a business analyst and a project manager, I've had the pleasure on working on a variety of different projects across multiple industries, initially focusing on healthcare and life science. So most recently, the project that I led was our FDA pilot along with Merck and Walmart. And I actually have a good deal of experience alongside MetaLedger as well. So I'm happy to hear that you've spoken to someone from there too. But over the past year, I've been focusing more on governance design. I had the pleasure of starting to co-create with our clients and design their networks, and I kind of fell in love with it. the thing that I really love about blockchain and that continues to captivate me and be compelling is that it's a team sport. We're bringing together a bunch of different enterprises, at least from an IBM perspective, that are often Fortune 500 and up companies that are looking to collaborate and share information and communicate in new ways and unlock value throughout. And I love being part of the team that helps bring those ideas to bear, incubate them, bring them to markets, and then help design the structures by which everyone is taken care of and they understand the rules of the road along the way. It's my personal hypothesis that good governance design can make or break successful networks, and I hope that I'll be able to share some of my personal experience and some of the experience from other IBMers in the past few years with you today. And so I also wanted to mention just what sparked my interest in blockchain, so to speak. I think it's interesting to talk about where everyone came from. There are so many people who I talked to who got interested initially thinking about Bitcoin and reading, Satoshi's white paper and understanding how to mine and what that might look like, and becoming fascinated and perhaps even obsessed with having different wallets. And I think that that's admirable and really fascinating as well. But I actually had the privilege of growing up in the blockchain space when the technology was still nascent, but some of the first real use cases were being explored. And so I was actually in a course back in college in Boston called Social Innovation and Entrepreneurship. And the course was really focused on looking at different case studies of how emerging technologies were enabling change across the world. And in one specific case study, we were studying, you guessed it, blockchain, and how it could enable microlending in a new way. For those of you who might not know, microlending is sending smaller loans to different individuals and really giving them the opportunity to capitalize on their small businesses. And what I found really interesting here is how many times, it's a holiday season. There are so many individuals that have been impacted by COVID and the state of our economy. And I think people are being encouraged more and more to give. And that's spectacular. It's something that I'm passionate about as well. But how often do you really know where that's going? And do you really understand, where your money is being put to use? And the hypothesis here was by using blockchain to track and trace these microloans and to really show up-to-date metrics on how the folks who received the loans were doing and to see if they needed more funding potentially, you were able to actually increase the amount of sustenance and funding that was being sent and hopefully make a real difference. So that's how I got started. I didn't think at the time that I'd be beginning my career in blockchain at IBM, but I could not have wished it better for the world, and I'm very happy about that.
Cool.
And so if we start off with my core thesis or my hypothesis of if you walk away today with remembering one key thing from this workshop or this conversation we're having today, I hope it's that distributed ledger technology, I refer to it often as blockchain because that's really how we talk about it at IBM, distributed ledger technology platforms that prioritize network design. And I'll talk a little bit more about what I mean when I say network design in a moment. They go to market faster, they have a higher probability of success in implementation, and they reduce costs from rework. And throughout some of the conversations we're going to have today, I'll lay out examples of what we've seen here. But I can't give you the exact numbers from what we're seeing from an IBM, but from my personal perspective, which is not representative of IBM as a whole, but representative of conversations I've had across the industry, I really think that networks can go to market perhaps 1 time or 2 times faster, have a significantly higher probability of success in implementation, and the reduced cost could be, I would think 50% or higher. Again, that's my personal thesis and not IBM's. Well, it's the difference between having a really good instruction book and not. As you've known, when anyone's been in the experience of, putting together IKEA furniture, it's really helpful to actually have that manual and maybe a YouTube video too.
Well, yeah, and bearing in mind that DLT projects, that the risks are so much higher because you don't get to succeed or fail small. These things are always, cross-departmental or cross-industry.
Right.
And so you've got a lot of chips on the table. And so,
And a lot of investment.
Yeah.
Which means rework is very, very costly.
Expensive. Oh, yeah.
Right. And I mean, platform businesses are a little bit of a different animal. We are seeing this continuing move towards the platform economy. We're seeing platforms become the choice in so many different industries. But getting to realize true value on a platform only comes with generating true network effects, where you get, for every new member who joins or new transaction that they put on the network, it triggers exponential value for everyone, which I'll talk about later. But getting to that point, that pivot point, can be really crucial and very difficult as well. There could be a long build up to get there too, which some enterprises, depending on how they're structured, are not as willing to take on.
Right.
Great. Okay, so Thomas, if it's all right, I'll also just mention, where IBM plays in the blockchain space, so we can get oriented. I know that this is one of the few times you've had a system integrator on, so I can just mention our history and the different things that we do here. So IBM has a long provenance with blockchain. We say that we started with the first prototype back in August of 2015. But the way that I like to think about it is, blockchain as a technology, in terms of its components, is not new. IBM has been working on cryptography and decentralized computing, distributed computing, and consensus building mechanisms for decades. We have cryptographers and IBM research who have been working on algorithms for forever. But what's new about it is how you bring these technologies together in blockchain or distributed ledgers. Over the years, we have noticed the importance of donating resources and code to things like the Linux Foundation's Hyperledger project. It's a common misconception that IBM actually owns Hyperledger Fabric, which we do not. It's under the Linux Foundation. We've also built our own blockchain platform on top of Fabric to help instantiate networks and get them running faster. And basically, if we fast forward to today, the end of 2020, almost 2021, we have, as Thomas mentioned, we've done almost 500 to 600 projects on blockchain worldwide. We've stood up over 100 production level networks, and we have thousands of practitioners across the span of business analysts to developers, architects, you name it, who are all focusing on blockchain.
Wait,
So
give that number again. How many people?
Thousands. I don't know the exact number, but the last time I checked, it was between 3 or 4 who are trained and credentialed on blockchain.
Right.
Well, what we're seeing is, even if a project comes to bear that's not necessarily completely blockchain enabled, there was likely to be some sort of a blockchain component. And blockchain's like, Intel Inside. How many people know which chip is actually inside their computer? Blockchain's running in the background. So it can be something that you don't necessarily see, but is enabling that communication, that collaboration in new ways.
Makes sense.
So I'm hoping that I can bring some of this experience to bear over the next couple questions that we'll talk about and share with you.
By the way, Dominic Thomas is in the audience, and Dom has the distinction of having built one of the very first, perhaps the first public blockchain network with completely KYC verified accounts called Warbly.
Awesome.
We sold that off last year. Dominic, really great to have you.
Yeah, I'd love to hear about your experience there. That sounds fascinating.
This is a heck of a slide.
It is.
I want to just browse this for a second.
It's like art.
Yeah. Well, and I'm just looking at how much is out there. And you
Yeah,
say, what can you do with blockchain? You can do a ton.
Right. Yeah, you can see we've as I mentioned on the previous slide, how many different projects we've been a part of. I wanted to give you a visual of where those might sit and what are the most popular use cases. Like the industry, I think, is pretty normal. Most of our initial use cases were in the financial services space. Yeah. And then we've kind of branched out into supply chain and onward from there. As you can see, we've collaborated across industries. I initially started off more in the healthcare and life sciences space and have since been in distribution and retail and the government and pretty much everywhere since there. But really, the breadth and depth of our experience is contained here. And I'll be talking about a number of these different use cases and networks too as case studies as we go through, and we talk about some of these questions today as well. Mm-hmm.
Yeah, we're going to find blockchain everywhere and increasingly in the background, but we're not there yet. We got a long ways to go. Agree.
And so, as I mentioned, IBM's blockchain strategy is the last slide I'm going to talk about here, I promise. And the right-hand side of the screen in the blue box, you can see we have what we're calling our IBM blockchain platform And within that box, you're seeing Hyperledger Fabric. So I know we have people of varying different presence in terms of the public domain or the private domain, but Hyperledger Fabric is the open source protocol in which IBM has invested most of its resources. Our strategy is to be the general contractor of choice. So even though we've invested a great deal in Hyperledger Fabric, we actually were one of the early contributors to Enterprise Ethereum as well. And we also have a core competency in Corda, and we're just continuing to develop all of those competencies too. But the IBM blockchain platform, I like to think about it is, our offering where if you were to develop a network on Fabric alone, it's kind of like riding a bicycle. But if you wanted to develop it with the platform on top of Fabric, it would be like riding a motorcycle. So it just helps developers and architects to spin up nodes faster, build consensus mechanisms faster, do those kinds of things. On top of that, we have some of our solutions, a lot of which I'll be talking about today. Some of them are things like IBM Food Trust or TradeLens, the bigger networks that are production grade with hundreds of different members on them, transacting thousands and thousands of times with a great deal of different assets. And those are solutions that IBM originally invested in and has been incubating along with our partners. On top of that, we have the ecosystem. So we have, if you want to be the general partner or contractor of choice, you need a lot of great tools in the toolbox and a lot of great partnerships with others who are experts in all areas of the space. So we focus a lot of time on developing those partnerships too. And then along all these three boxes is the services piece, which is where I sit and where my colleague who's with us, Andy, sit. We are consultants by trade, and we help along all areas of this stack and along all areas of industry as well. So that's where IBM plays in the blockchain space. That's how we think about it. And I just wanted to provide that to you as a bit of a background on how we think about blockchain.
That's super. Before we get too far away from the tools, we had a question from an audience member. Rajendra was curious about domain-specific languages and the use of domain-specific languages to help build more robust smart contracts. I don't know if that's something that you feel you can talk about, or Andy, or if that might be for somebody else.
Thank you. Yeah, it's a great question. It's not my direct area of expertise. I'd be happy to connect you with one of our chief technology officers or someone who'd be able to answer that question. But before we move on, Andy, was that something that you have come across?
And Andy, specifically the domain-specific languages and how they might help develop more robust smart contracts.
So I'm just thinking, I think the thing that I'm most interested in is, when you build a smart contract, how reusable it's going to be and how interoperable it's going to be. But I haven't come across that level of technology yet.
Yeah, I think language evolution is still pretty new in that space. We're seeing a need for a language that can give you provable consistency, provable verifiability of execution. There's a lot of headroom to grow in creating domain-specific languages. So I've heard of a few. I haven't touched any that I believe in yet. So perhaps Rajendra, you will come up with something for us. Let's move on.
All right. So earlier, when I explained to you my core insight, or what I hope you take away, I used the term network design. So what I'd like to do is just explain IBM's methodology behind designing networks. And this is really an amalgamation of all of our learning for the past 2015, 5 years of doing studies across all of the different projects we've been a part of and the different networks that we've had the pleasure of helping to stand up along with our clients, and bringing it together into this framework by which we believe you can do those things that I mentioned before, get to market faster, avoid rework, etc. I've been using the word design a lot, and you'll continue to hear it throughout today. And I want to mention just what I mean by that and how we define it. And when I think about design, it's really just about being purposeful and intentional when you're doing something, when you're building something in action or building an object. And really, I know design can mean different things to be different people, but really for today, let's just think about it about being intentional and purposeful. So a short definition is just design is the intent behind an outcome. So now that we're talking about intent and being intentional, what do we think it means in terms of being able to be intentional about success in blockchain? And the way that the place that I like to start is by remembering that blockchain at its core is a technology that enables transformation. But the key caveat, the key thing that makes blockchain different is that it enables this transformation at the level of a market or an industry or an ecosystem. Blockchain is a team sport. And in the early days, we actually saw a bunch of organizations that had some initial innovation funding. They wanted to use and test out a blockchain prototype, but they didn't want to do it with any partners. They wanted to just test it out internally within their own organizations, which is not always the best use case.
Right. Well, they didn't want to fail in public. They're a little.
I get it. So we would try to do interesting things where we would bring together multiple parties together by having different silos or different lines of business with their organization interact, which was compelling. And in some cases, blockchain is actually very valuable within even just one organization if the organization's big enough or it has a lot of subsidiaries. But yeah, just something to keep in mind is with blockchain, we're trying to enable this transformation at the level of an ecosystem. The power is in the ecosystem and bringing together those players to work together in new ways and unlock value creation throughout the way. So how do we do it? So let's get to the actual framework. Here are the first 4 chevrons of how we think about launching networks. The maturity phases, you could think about them. The first is explore on a very, very high level. This is where we're seeing clients really start to put their toe in the water. They're testing things out. They're maybe thinking about a problem or a challenge that they're facing in their industry, and they're deciding whether they want to build their own network, whether they want to build an application on somebody else's network, whether they want to join or merge, etc. In the next phase, once you've done that initial understanding, taking a look at the marketplace, doing things like taking an assessment of the ecosystem, understanding the opportunity, and seeing what tech is out there, as we move into Envision, this is where you have a better idea of what you're going to be working with. So we see clients doing things like confirming their business cases, mapping out the ecosystem and seeing which partners they need to bring to the table when in order to get to those network effects, and figuring out their exact technological approach. In this Envision phase is where we're seeing most clients start to experience with either a prototype or a proof of concept. After the Envision phase, once a proof of concept has generally been done, you've got some running code, probably doesn't hook up to any live data, but have proven out the initial hypothesis for why blockchain might be a good fit. We move into Establish. This is where I spend the majority of my time. It's coming together with our clients, defining the rules of the road through a governance playbook. And then we've got my colleague, Andy Martin, on the phone here. Andy and I will partner together with the clients to help develop the incentive model, and we'll work through the commercial model from everything from traditional financials and projections to, with the blockchain perspective, it's really about mapping out that ecosystem and figuring out how we are going to incentivize new behaviors between them and how that plays into the different fee structure and cost rates across all layers of the blockchain platform stack.
Yeah, so it sounds like at the Envision stage, we're talking about, I think we're going to put on a play. And then during Establish, it's like, okay, so what's the venue? What's the ticket price? How many seats? How long are we going to run it for? So you're getting more and more detailed and more and more real world through a series of stages.
It's just like starting a new company. A lot of these companies, we just think about them like startups, and you'll see a lot of those themes here too.
Yeah.
And then in Evolve, that's where we're putting on the show. That's where we're saying, okay, it's curtain call. We're ready to go, and we're going to launch, and we're going to see how this thing goes. And depending on how we do on night 1 or night 2, we might tweak some things along the way. And we're just going to continue to grow and evolve and invest in new features and functions and apps and et cetera.
Right.
Yeah. So that's the baseline of the phases of the framework. And then we lay out a bunch of different activities and engagements and different things that people or networks should be prioritizing along the way across these 3 work streams. So we start off with governance design, which is my personal bread and butter. Governance design at a high level is where we're forming the rules of the road. It's all around designing the strategy and the operational model for member benefits and outcomes. And for the majority of the networks that we work with, they're trying to be as fair and democratic and transparent as possible. At the same time, governance design needs to be flexible. Generally, we create principles and documents that are living and breathing and evolving, because as blockchain networks are like startups, sometimes it takes 1 or 2 pivots before you really hit your sweet spot and are able to expand and grow. The second work stream is business value design. So when I introduced Andy and when we talked about this earlier, it's everything that you would typically think about with creating a business case and understanding the financial projections. But the difference with blockchain is, again, going back to that ecosystem and trying to incentivize it, people to have different behaviors and understanding how to get to those network effects, as well as how to monetize every layer of product on the marketplace along the way. And then finally, we have technology design, which is typically what people think about when they think about blockchain.
Yes.
It's just, let's get a prototype going. Let's build a pilot. All right, how do we go to production? But I think that the successful networks and the ones that are able to scale instead of stall are the ones who are considering the different intricacies across all of these three work streams as they are building out whatever technology platform they're building. The hard part is the
these are really
business.
three work streams, is what I'm hearing you say. And these are not necessarily in sequence on screen. It's not that governance comes first. I imagine business value would probably come fairly early, but then they probably run in parallel.
Yeah. So what you great question. Yeah. So what you can think of is if we have these four chevrons, then across each of those three work streams, if you were to layer them before, there are additional activities that you could do for each of them over the course of the four chevrons.
Yeah.
And what we're seeing is, just like you said, these are not necessarily listed in order. We actually see organizations and ecosystems start in different places. We've seen most of the ecosystems start with technology design, where one or two founders are doing an initial proof of technology. And then maybe as they're getting to pilot, they're realizing, hey, we don't have a strong enough business case to get funding internally, or we don't understand how we're going to be valuing IP rights or how we're going to be defining membership. So we need to go back, we need to talk about governance. I would say that probably 85 to 90% of these networks start with technology design. They progress and then they need to go back to the other streams. However, we did see one starting in healthcare where they spent so much time talking about governance. And we'll talk about this later, but they actually, you think about who needs to be at the table to start and really get something good going. Yeah. And I typically recommend that it's, 3 or 5 maximum member organizations. But this particular organization had between 7 and it grew up to 11. So every time you add another board seat at the table, decision-making gets that more complex. Yes. So they talked a lot about governance and didn't have running code, which was, I definitely would say, is a red herring. But then they came back and went through technology design and business value design. But the main point here with these chevrons is to not get too far in any work stream without going back to the others.
All three have to be coordinated with each other, is the sense I'm getting from you.
Exactly. Yeah. And they're all interwoven and interlinked.
Yeah. Robin Roy Thomas has a question about consortia struggling with, maybe poorly defined roles, unclear responsibilities of the members. Would you call that a business value challenge, or is it more of a governance design challenge? Where would you put that?
I would call it both, and here's why. When we're talking about roles and responsibilities, and I'll talk about this in a second, that typically falls under governance design. However, it's inextricably linked, and I think Andy would say the same thing, to what kind of value are those different types of members going to be expected to be getting from the network, and what do they need to give to get that, and how's that going to change over time? So it's a great question. And yes, I think that the consortia businesses are the ones that are often the most difficult to get off the ground, but they also often have kind of the highest potential for opportunity in the way that they're really bringing together a whole ecosystem or whole industry.
Yeah, the shared source of truth isn't all that great if no one's sharing it.
Yeah, and it's really all about the data and who owns what and how are they going to bring that together in new ways.
Yeah. Okay, let's keep going.
Okay, so how do we actually do this? I've showed you the fundamentals of how we think about the method, the phases, and the work streams. But if we dive deeper into governance design, and great question about where do we think about member roles and those kinds of things. Governance design at a high level, we talk about different components and we kind of slice and dice them together into a governing charter or a foundational governance agreement that can be updated and amended over time and eventually built into code. But the largest 4 buckets or categories of things that we talk about are business, operations, legal, and technology. We call this the BOLT framework, easy way to digest. But from a business perspective, early on in the network, we typically have a visioning workshop where we do things across all 3 work streams. From a business perspective, this is where we will actually write together the vision and the mission statement from the network. And then we'll do things like also in the business area, talk about the sales channels, how are we going to think about marketing, How are we going to think about the strategy, how it will be today, how it will change over time, what's our roadmap, all that kind of typical stuff that you would do in business, although it's just amplified and made a little bit more challenging by there being multiple members at a table trying to decide who each have their own specific interests and incentives of being there. And sometimes we actually have to ask the clients to take off their hat of wherever they work and put on, their hat for the consortium or the founder-led entity.
That's
Right.
great right there. That's something that Thomas and I have been doing a lot as well, that role playing. Yeah, that's fantastic.
Yeah, when you talk about setting up a consortium, blockchain or none, you're really talking about thinning the barriers between you and the other organization members. And if
Right.
all you do is think parochially about how I'm going to benefit myself, maybe at the expense of others, you're not going to get this thing off the ground. It's like being you're the senator from Nebraska. You can't just be advocating for Nebraska all the time and never for
Right.
the
Got to
nation
be
as a
for
whole.
the United States sometime.
I mean, you don't
Yeah.
ignore your the state you came from, but you don't just think about that. So
Right.
It takes a
Yeah.
sort of corporate level empathy, which
yeah,
is fascinating.
yeah. How
It
do we
does.
make the entire thing work, not just work for the group I came from?
Right.
Otherwise, you founder on mutual suspicion and mutual greed and an unwillingness to create a pie that's bigger.
Right. Absolutely. And what's actually funny is we take that network intent statement and we actually read it out at the beginning of each meeting going forward, so that
Nice.
you can imagine you're in the thick of it. This meeting about this building this consortia is just one in the stack of whatever's on your calendar. It could be helpful to have that kind of initial palate cleanser to remember, this is why we're here. This is what we're going after.
It's a
But
great
it definitely
ritual.
works well.
I love it.
Absolutely. So in the operations component, this is where we do everything from define the membership, we call it membership management, but all the member roles, responsibilities. How are we thinking about onboarding and offboarding? What are their rights and how might that translate into an equity model? All those kinds of things. What are the different kinds of votes that might happen and how are we going to allocate votes among members, et cetera. We also talk about the high level operational structure. How's it going to be, if we have an operating team, do we need technical different steering committees and working groups beneath them, just like a typical organization would. And one of the policies that I always advocate at the start is called rules to change the rules. So very, very clear, but you'll be surprised how often you get going and you're excited about writing a specific governance policy, but you don't have a policy to change it until it's too late. So I always advocate for doing that early, as well as forming a dispute resolution process early, because often, you're in the boat, everyone's excited and you feel like we're aligned, but then if something comes up and there's a minor hiccup, it's just easier to have a policy to work through it.
The one we agreed to last month, it's like, we're going to do that. Oh yeah, okay, we've already agreed to it. Because if you wait until there's a dispute before you figure out how to resolve it, no one wants to agree because they're worried that somehow the one you came up with is going to benefit you.
Exactly.
And I don't know.
Then you'll be arguing about the process.
No, you'll never get to agreement. Just pick something early on and commit to it. And then if you want to revise it, you can.
Absolutely. In the legal section, everything you typically see, what are the different regulations that we're going to be working with? What are the compliance agreements we need to be thinking about and building in? How are we thinking about tax jurisdiction? How are we making sure that we are compliant with any antitrust laws? We've seen a number of consortia, unsurprisingly, start to wade into different waters than they originally intended to and start to be confronted immediately with some antitrust implications.
Yeah.
And then also, huge topic, discussing intellectual property. What are we thinking and how are we defining IP that came before and that came after and what was developed by the actual network itself? And how are we actually allocating the rights to the new insights that are derived off of data that wouldn't be possible without this network coming to bear? So those are really complex conversations. And then finally, technology is everything you typically think about, from okay, how are we thinking about data standards and formats and security standards as well? And how are we going to bring and onboard solutions onto the network? And what are our requirements there? Blockchain networks are definitely different in that they're platform businesses. So although the founding entity might have a couple applications on the network, they generally, or at least we're seeing a trend in the marketplace in which they want to allow other service providers to offer applications as well. And so there are a lot of different rules about keeping those up to date, making sure that they're functioning the right way, and everyone is continuing to build the technology in a harmonious fashion. So those are the main categories of governance design. You can think about it where each of these big buckets we have, I'd say between 5 to 7 subcomponents. And typically in the governance design part of the engagement, we will work with the consortium or the founder-led entity to understand which are highest priority. And then on a 1 to 2 week basis, we will talk through all of them, the different pros and cons of each, examples of how they could be structured into principles, and then make those decisions together. And that's typically the work stream that I would lead on these projects.
Nice. Yeah, and I can't emphasize enough the importance of having a simple framework up front early when it's small. There's a saying that if you see a complex system that actually works, it's because it evolved from a simple system that worked. And if you have a complex system that doesn't work, you're going to have to back up to a simple one and then iterate forward.
I could not agree more. We try to keep these things as lightweight as we possibly can for as long as we can.
But no later.
Yeah, that's true. That's very true. So the next work stream, business value design. This is Andy's, our worldwide expert in business value design, has been part of more engagements than anyone else that I know. Andy, if you'll allow me, I'll just do a quick introduction, and then as these topics come up, maybe you could help me answer some of those questions. So business value design is all about how are we capturing the value from this market that we're convening or bringing together in a new way. We've got all of these different members with different kinds of data and interests and incentives and their own personal agendas. But how do we think about the business case, not only for each member entity, but for the entity of the whole? And then if you think about it, for each different layer of product in a marketplace, the business case might be different for everyone. So there's almost a network of business cases and models that needs to be spun up. Talk about complex. But with business value design, it's really all about how do we enable those network effects? And in governance, I'm focused on things around recruiting and making sure that we have the right membership structure to encourage people to come into the network and to see the value they're going to be able to capture. But in order to enable network effects, Andy spends a lot of time on developing our incentive models, understanding who needs what, when, and architecting those incentives so that they can be evolving over time.
Right.
And then
We've got
finally,
a question from Brian, real quick on business value design. So Brian says, for the legal design and the BOLT section, based on project experiences, do you think that jurisdictional differences pose more sorts of challenges, or do they pose opportunities?
I think it can be, I'll give you a typical consulting answer. It can be both. I think that we've seen there can definitely be challenges, especially when there are things like working with the healthcare network. There are different laws around patient privacy in different places. Thankfully, with the advent of GDPR, things are becoming more easily transferable there. But we've also seen that with antitrust laws, it can be tricky if you want to start in one country, and a lot of these are global networks. So moving into others, there are all these different kinds of implications around even where the entity is headquartered. That's quite normal. In terms of where it has been an opportunity is we think about it almost like a franchise model, where if a network might get started in one country, and it might not make sense for them to directly bring in similar members from another country. Maybe they're not structured the same. Maybe the value systems flow differently in the different country. They could actually kind of franchise out a version of their platform and enable the other country to come on that way in terms of like geographic jurisdiction.
Yeah,
So
we're seeing that, for instance, with Grain Chain, who deliberately spin up a different chain in each jurisdiction. So Oklahoma has one separate from the Texas one, and then there's a different one for Mexico and a different one for Guatemala, so that all the players are always inside of a legal regime that's common across them. And they're not trying to mix and match across those lines. Agriculture, of course, being regulated in very specific ways and somewhat different ways in legal jurisdictions. So brilliant question from Mr. Dennehy. Thank you, sir.
Absolutely. Thank you. Okay, and then technology being the last piece, and probably the piece that people are most familiar with, is how are we building the initial prototype and the proof of concept to ensure that we're meeting user needs. And where I've seen most projects go wrong here is to not focus on the end user at heart and to understand what their problems are. Right. Sometimes, especially in the early days when enterprises were just looking to do some experiments with blockchain, we would do a prototype and then look at each other afterward and wonder, like, why did this even matter? And that was because we weren't listening enough or paying enough attention to users to understand if this would actually be impactful for them.
There's a temptation when you're playing with technology to work on something that no one will mind if you work on it, something sort of trivial, but then you build a trivial solution to a trivial problem, and then no one wants to put their scarce time and energy into it.
Right.
So you got some technical experience, but you didn't really justify the project very well.
Right. And here we're also talking about resiliency and how to make these products unique. And Andy brought up interoperability before. It's one of those things that kind of keeps me awake at night, is thinking about if we have, one network focused on this healthcare use case and another focused on a kind of similar use case, how are we going to be able to bring these networks together over time? And I will say that I haven't necessarily seen interoperability between protocols and networks done very well at scale yet, but I am hopeful. And I know IBM personally has a lot of resources invested in making that happen.
Yeah.
So I think, Thomas, one of the first questions.
Oh, here comes the slide I've been waiting for. Why do projects struggle? Because I know they do.
Yeah. So many reasons. So I think that this was one of the first questions that we were going to discuss together. Why do they struggle? And we could probably spend the entire time focusing on this. But, it's natural. Blockchain is not easy. The technology itself can be a little bit tricky. And then bringing together a bunch of companies with their own ideas of what's valuable can make it even harder. But if we think about it at different stages, I want to tell you a couple stories about what I've seen happen.
Yeah, please.
And give you some ideas there. So in the first stage, the explore stage, you remember this, it's when you're just thinking, you come up with your idea for the play. We see projects struggle here if they have an unclear problem statement, if they haven't spent the time to actually map out that vision and the mission statement, and they're not really sure what they're going after. For instance, it could look something like, well, we want to revolutionize the healthcare industry. Okay, what part and what specific part of that part, and how are we going to start? And so specifically, I gave you an example before of we saw a network here that focused completely and entirely on governance early. And there were too many cooks in the kitchen, and it really caused them to be stalled because they couldn't get out of the explore phase. They didn't have any code running. They didn't understand the business value as well. In the second phase, in the envision phase, typically, this is once you've already stood up your proof of concept, you're looking to get more funding and to go and build a pilot. So in order to get more funding, the main reason we've seen projects struggle here, and I'm going to spend a whole slide later on how to get out of the POC stage, so I'll leave that teaser there, is because they don't have a strong enough business case. They haven't invested the time or the money and able to understand what the ROI might be for each member in the ecosystem, and empowered those members to share the project and to sell it internally to get that funding to move on to pilot. In the establish phase, we've seen a couple examples where governance policies actually needed to be almost completely redrafted or rewritten. So an example here was we had a major network in the global shipping industry, and they originally thought that they were going to be structured with 3 key players at the helm. They were going to structure it like a joint venture. And they got to the established phase and said, okay, our doors are open. We've built a pilot. We're ready for everyone to be here. But where, we thought if we build it, they will come. Where is everyone? And they realized that because of the perception they'd given the market that the 3 largest players were in control and had already drafted the governance policies, other people didn't want to join. So they actually had to shift their model.
The deck is already stacked against us.
Exactly.
Okay.
Exactly. But
Maersk struggled with that exact thing.
Yep, that's what I'm alluding to.
Sorry.
They shifted. No, it's okay. They shifted the model, and they were able to expand. As you know, they've expanded to hundreds of members now.
Probably the best turnaround case. Really fantastic work there.
Yeah, I would agree. And then finally, in the evolve phase, we do see some other instances in which the governance policies need to be redrafted. But basically, with slow recruiting and onboarding, we found that sometimes when you're bringing together a bunch of companies to collaborate, you kind of forget the basics, which is what's our sales channel, who's running business development. And as you're trying to keep the operational structure really small, maybe there isn't somebody fully dedicated to business development and to bringing people on board and to showcasing the value. So there are little things that can be changed to really speed up adoption as well. I'd like to just speak to quickly a case study of something that a team did really, really well. And a problem that I alluded to before is when the group of founding members is just a little bit too big. So when they're a little bit too big, and there can be, in this case, we've got almost 10 or 13 banks at the table. something that Wheat.trade did really well. And Wheat.trade, if you haven't heard about it, is a group of banks came together to enable trade finance and take away a lot of the different manual interventions and problems that were happening in terms of being able to enable trade across borders. And so they were able to open up trading and increase transparency, et cetera. But one of the things that is a good lessons learned from them is that whenever they needed to make a decision, they would keep the user first. So along the way of developing their product, they would do enough user research and interviews to understand what was important to the end user. Because when you bring that to bear in terms of decision making, it can make things a lot more clear. Well, for one bank, something might make sense, and for another bank, something else might make sense. But for the user, who's the person for which we're trying to capture this value, this is what they care about. So this is how we should proceed.
Nice. I like it.
Another question that I think you had, Thomas, was what questions are people asking far too late or too early when creating these systems?
Yes.
First one, and Andy, if you want to add some color here, I'll invite you to come off mute, but what is the value and incentive for each member type? As I've mentioned a couple times already, blockchain is all about the ecosystem and making sure that that ecosystem becomes more valuable to its members with each transaction and each new member who joins. And far too often, we find that people make a lot of assumptions about how the ecosystem will be valuable, but they don't break it down into granular enough terms by use case and by member that's a part of that use case, and they don't have that strong enough picture. The second thing is, who are we today? Who are we going to be tomorrow? And who will we be when we grow up? Alluding to some of the questions people ask far too late as they think, okay, we are going to be in this country and we're going to be focusing on this use case and that's it. But sometimes that could be too limiting because maybe they'll come across a competitor that will come across and eat their lunch and they'll need to pivot, but they've written their network intent statement and their governing principles and designed their technology to be too constricting. And so it's hard for them to pivot.
Hmm.
The third one is around compliance and regulatory rules. I've already alluded to this. Basically making sure that you understand the full breadth and depth of your expansion policy and roadmap and how that alludes to what different rules may apply. And finally, how's my IP going to be protected? This is one where I see a lot of networks tempted to push it off and kick it down the road because it can be a tough conversation. But at the same time, it's really hard to enable innovation when people are not feeling safe and secure that all of the investment that they've had in their own IP is going to be they're going to be made whole for that. And so it's best to get the hard conversations out on the table early is what we've seen, and make sure that even if it's not the right time to discuss them, people know that they're coming up and we will be getting to them.
Hard conversations like?
So in addition to intellectual property, you could talk about, okay, you member entity originally advocated for this use case, but we don't think that that's going to be valuable for the other 75% of the network. So we're not going to be investing in figuring out how to bring that to bear. But you could if you wanted to. Really being honest and transparent and bringing it back to the users and the members as well.
Okay.
So here's a specific network that you might have heard about. It's called IBM Food Trust. And basically it enables data sharing across the food ecosystem. IBM and Walmart initially partnered on this a couple of years ago, where we learned that we could use blockchain and make it or trace a mango much more quickly, which has implications for food recalls. So in this case, we cut down the time that it takes to trace food product from farm to shelf from a couple weeks to actually seconds. And then we were able to apply some of the learnings from this project into other industries like healthcare and life sciences. As I alluded to, the project I did before with Walmart and Merck and KPMG and the FDA pilot, where we were able to take some of the lessons we learned and apply them to recalls in the pharmaceutical industry. But basically, one of the things that Food Trust did really well was they learned at the outset that although they focused on this non-competitive issue around food recalls due to things like E. coli, it wasn't necessarily the most compelling use case to bring together the ecosystem and to convince everyone of the value just with that one use case alone. So they were able to quickly pivot and to add on a layer of IoT data to enable better insights into what food was fresh, and so you could better distribute it and get it on shelves faster if it had been sitting on a tarmac somewhere, et cetera. And essentially, by enabling additional applications on top of this platform, they were able to reach network effects by making it more and more valuable on top of that initial use case, which was non-competitive, just around making sure that you could track and trace food and enable recalls to be faster, which was very compelling. But sometimes there's even more value that can be derived.
Right.
So I know, Thomas, we have about 9 minutes left in the general session. Are there any questions that you'd like me to focus on specifically? As a reminder, we've got a balance between code and human factors, who needs to be brought in to sponsor a project, getting beyond POC. Got a lot to talk to there, blind spots, et cetera.
Let's go with getting beyond POC. I think that would be the most important. And we may just have you come back for another episode and go even further, because there's a lot of rich content here and I don't want to rush it.
Whatever is best, whatever you think is best for the group. So, okay, getting beyond POC. I love talking about this because it happens to 95% of the projects. Built something really interesting. It's at a prototype level. You haven't pumped real data into it, and it's time to go to pilot. And when it's time to go to pilot, that's where we have to ask those tough questions, like, who else do we need to really model out this network? What kind of funding do we need to get there? And how do we need to think about some of these initial things that we thought we could put off in the POC stage, but we can't when we get to pilot? And so there are many factors that distinguish networks that can get beyond POC and ones that get stalled here for a long time. And part of this is, blockchain is an emerging technology. And for the past few years, we've seen a lot of tourism in the space where people have been investing in prototypes just to see how it works. But now it's my personal belief, and what we're seeing in the marketplace is we're emerging from this lull period after that tourism period, where the real use cases that proved real value in that initial tourism stage are gaining legs and traction, and they are going to be making real changes in the market.
Tourism is maybe the perfect word. They're not setting up shop. They're not moving in. They're not opening a business. They're like, oh, look at that. Oh, it's the blockchain. It's cute. Oh, Martha,
Exactly.
look at, oh, isn't that cute? Oh, yeah, that's nice.
Exactly.
And then move on. And yeah, if there's not a clear vision or they don't see the value, right there, you're going to lose people's willingness to invest scarce time and energy. I'm curious, do you see people thinking that this is going to grow their top line, or do they see it growing the bottom line? I have my own theory. Or is it both, or do they not think that far ahead at this point?
So I would say that initially people get in to try and control costs by avoiding different manual work, digitizing processes between entities that they can do now that they're all collaborating. But over time, once they do that right, then you can unlock more of the additional revenue streams. Then you can talk about, okay, now that we're collaborating, what are the additional ways that we can get into the market? What do we have? We know our competitive advantage for our own organization, but it's different when we're all at this together. What's the new white space we can go into? What are spaces we could reimagine? So it generally starts with those cost takeout kind of conversations. We see a lot of traction around use cases just around supply chain visibility, or improving contract management, disputes resolution, all those kinds of things that are really generally focused on cost takeout. And then we get into the more revenue generating use cases. What could we do now that we have all this insight of understanding? How could we forecast demand differently? And how can we, that's the general way we see this moving. But as we think about getting beyond POC, I like to ask, why for each of these work streams, what is the problem that keeps us from getting beyond POC? At IBM, we have this exercise that we do with our clients whenever we're trying to solve a tough problem that's just called the 5 whys. And we just keep asking why until we get to the root of it. So let's start with governance design. From a governance design perspective, the main reason we do not get to pilot is because partners don't understand the vision. Where are we going? Why are we getting there? Or how are we going to get there? And why does it matter? A way to be proactive about this is, like I mentioned before, writing that network intent statement early in the first workshop and then revisiting it every meeting afterward. That way, it's hard to say you don't know what the vision is because we've been talking about it a lot. Reactive, if you haven't spent the time to write the network intent, if people are still asking, what's the vision? we like to do a round of stakeholder interviews with each of the key founding member organizations and understand where their challenges might be, bring them together, synthesize them, and figure out how to attack them all going forward. From a business value design perspective, the key reason, not rocket science, partners don't understand the value. So to be proactive about this is doing that early business case. If you're going to do a prototype or a POC, and it's something that I really advocate for on the projects that I'm still a part of where we are developing that product, if you're going to do a POC, there should be a business case element, even if it's just qualitative. Even if it's too hard to get to the quantitative elements, focusing on that early can do wonders when somebody from the procurement office needs to go to the CFO and ask for funding for a pilot.
Yeah, if I'm going to take my $50 a unit cost down to $5 a unit, and we're doing about 10,000 a month, I have some dollars to talk about now.
Right. And it's even, we can do this better for the customer. And that way we think that we can capture X% more of the market. It can be back of the napkin, but just something.
Yeah. Reduce churn, increase mind share, cross-sell. Exactly. All kinds of things.
And then reactively, because blockchain networks are functioning a lot like startups, it's actually putting together a pitch deck, just like a startup would have. Maybe it's a 5, 7 to 10 slide pitch deck. Start with a vision, talk about how you're going to make money, understand the different revenue models and when you'll be able to get there, and then clearly lay out the ask and what you're going to get with it. You'll be surprised at how often all it takes is for us to come together as an entity and write one pitch deck together, and then each of the different member companies can go to their own CFOs and try to get funding. Next, technology design. People don't understand why blockchain. This is a very common place where we see entities get fixated. And they get fixated on the idea of, okay, why are we using blockchain? Why does it fit? Isn't it really expensive? Who cares? You could be proactive by focusing on human-centered ideation and on the user's problems at the get-go. But if you need to be reactive on why blockchain, it's always worth just having another blockchain one-on-one conversation and actually mapping it out visually. Andy, I heard you come off mute during business value design.
Yes, Andy had something to say.
Yeah. I was just going to say that when I think about this, I mean, clearly the obvious thing is the lack of the economic incentive. But I think there's an interesting conversation as you pivot from a single project to a platform, and it's really important to choose the right first project, which is going to be the foundation stone to then build project 2, project 3, project 4. And actually, we had that with Food Trust. When Abigail said, the first use case was about food recall, which is remarkably painful when it happens, but it doesn't happen very often. And actually, the real problem is around quality and freshness. And with the same people in the room and the same data, you can kind of pivot from recall to freshness, and then suddenly you've got folks interested. So I think selecting the first project, which is going to be the foundation stone to then build out project 2, 3, and 4, is really important. And you also talked about cost per transaction. That's an interesting one because, again, playing from a platform point of view, your costs are tending to be reduced as you increase your volumes, but you start off with an infrastructure cost you've got to recover off a small number of transactions. So there's kind of that pivot from, we just have to get this engine turning. And once it's turning, we're fine, but we've got to get it turning. So that first project is phenomenally important, which brings the right people into the room and then kind of drives those network effects as you add more folks and build out the platform.
Got it. Alrighty, I'm going to have to say it's time to end the live stream and the recording. And so I pause to say thank you watching on YouTube. If only you were here with us live, you could stay on for another half an hour and get even more detailed with us. Or you can tune in next time, because I fully expect that the audience here is saying, yes, we need a follow-on session. So we'll probably have Abigail and Andy back if they'll let us. So for now, thank you very much for tuning in. I'm Thomas Cox with Kirsten Pamalis Langenrunner with Enterprise DLT Live, and we will see